Trade deals, and trade deals. That's what we're seeing across the board. Quite interesting. Obviously, Donald Trump is everywhere now. It's a deal that's been done. Proof is obviously in the pudding. Deflationary data out of China. 3 rounds of data out of the weekend. We had producer prices and consumer, and month-on-month and the year-on-year data. So it'll be quite interesting on what's going to happen between the US and China in their trade deals. But first of all, let's have another bit more of a deeper dive into what's happening on the tariffs, and particularly that deal with the UK. And is there any data out there that we're actually seeing that is more conclusive about what the effects of the tariffs are? Okay, but when we look at it, the UK deal, Stammer and Trump, they're sort of quite chummy together. Said the deals will benefit both. I don't think it actually will. I think the UK actually caved in a little bit in order to try and get some deals across the line. But anyway, a deal has been done, and I think everyone's quite happy. In fact, there's a little bit of exuberance starting in the equity markets to say, well, this is all fantastic, deal's been done. But the key problem here is that the tariffs still exist. And whilst the tariffs are still there, it's still going to have inflationary problems down the track. Stagflation, inflation, hyperinflation, I think that's going to happen. But anyway, whatever it is, you're still going to get some inflationary concerns. Tariffs impose tax on the consumer. There's a bit of a transfer of wealth there as well. So what that's going to be, that's why the Fed has turned around and kept interest rates where they are. So I don't think we're really going to see too much on that front from Fed Powell, although he's certainly being criticised by Trump for not acting sooner rather than later. And I guarantee you, if anything happens there, it'll be Powell's fault and not Trump's fault that in fact, the US will head into a recession. Okay, so we've had a look at the UK and US tariff deal. Yeah, there's a little bit of obviously the devil's in the detail there. But as I said, at the end of the day, we feel it is better for the States over the UK, and whatever it is, it's going to be inflationary. So talking about inflation, let's have a look at the numbers that came out of China. Now, to me, that is super important. Of course, when you look at the numbers that came out, I'm just grabbing them now, the numbers that came out were not that good. And to me, that is one of the big concerns. Because when you do look at it, we've still got those inflationary issues, or lack of inflationary issues. And when you look at it, the producer price is still on the rise in the States. China, they're on the lower end as well. Consumer price fell for the 3rd month in a row, which is not good. And producer prices fell the most in 6 months. So that to me, it suggests that things aren't recovering there at any particular stage. So I guess that when you look at that, when they're coming down the table to negotiate, I get a sense that you've got one economy that's got inflation and the other one's got deflation. And what sort of deals are going to happen around that? And I think that to me is the key. Obviously, everyone's in Switzerland at the moment trying to negotiate hard as to what happens. Everyone's got their leverage points, China and the US. So they'll be fighting hard to see exactly what happens. So I think that inflation then, given where interest rates are, particularly in the States, that might change and the Fed might decide, well, we're not going to move anything on cuts. Different story in China. Now, this is quite interesting. China is placed in a unique position. They've got obviously $2 trillion worth of reserves that's just sitting there. They're obviously owning a fair few of core US bonds. They have the ability to stimulate their economy. Interest rates are at reasonable levels. And when you look at it, they have the monetary and fiscal policies that they can play around with and tweak to actually stimulate. Now, it's a lot harder, a lot easier to stimulate an economy that's suffering from low growth than it is to sort of slow down an economy that's suffering from inflation. So when you see the two, China's perhaps in a better position to be able to weather exactly what's happening and to be able to make the right decisions. But let's see, I don't think a deal will be done that quickly. I think it's going to take a fair time. But as we see, markets are certainly moving to the top side. And that's part of that exuberance. I think one interesting thing that came out, which I sort of picked up, Mexico's auto numbers came out. Now, this is the first time since we've had tariffs in. And whether or not this is a proxy for what's going to happen for other data sets that come in, I don't know, but it probably will be. We looked at the auto industry in Mexico and what the headwinds it was facing, and obviously tariffs. But when you look at it, the car exports to the US market, we saw super steep declines. Just to name a couple there, Mazda's shipments dropped by 60%. Volkswagen by 44%, Mercedes-Benz by 43%, BMW by 32%, and it goes on. So if that's the concern that we have, that tariffs are going to cause, they're not only going to cause prices to go up, but they're also going to cause lack of economies to go through. And if that's the case and you're not getting those exports, people are sort of wait and see or not doing anything, then that's going to dampen economic behaviour as well. So there are quite a few things which we're starting to leverage here as to what might happen. And when I do get it, I sort of understand that you might turn around and say, well, look, okay, we've got inflation. In the US, we've got no inflation in China. So how's that dynamic going to play out at the moment, particularly when they come up with a deal? So is it going to be less exports, less imports? What does it actually mean? And I think to me, that is one of the keys as to what could occur. This week, obviously quite a bit on, and in terms of what's happening in terms of the trade, but there are other things that are happening there which in the economy, which we've got to look at. Obviously, trade negotiations are the key, but we've also got CPI numbers out in the States, retail sales, and a lot of speeches happening there from Fred Powell. The good old Michigan consumer sentiment number comes out, so there's a lot happening there. But I think we've also got a lot of reports coming, Cisco, Alibaba, SoftBank, Walmart, Target, all these things are really going to be important. So let's get a good view as to what's happening on that front, and that'll provide us with a good idea of what's happening on the economy. So I think there, if anything there, that's not too bad at all. We'll get a good line as to what is actually happening for the economy.